Welcome back to the deep dive. Today, we're tackling a really interesting topic. August in the stock market. Bit of an infamous month sometimes. So our mission today is pretty clear. Unpack why August has this, let's say, challenging reputation, especially looking ahead to 2025. And, most importantly, what do these historical patterns potentially mean for you and your market approach?
That's exactly right. August isn't just another tick on the calendar for the market. It really does have a unique spot, often a demanding one.
Okay, so let's dig into that reputation. We hear it all the time, right? August is tough for stocks. But is it really as bad as they say? How much is perception versus the actual hard data?
Oh, it's definitely not folklore. The data paints a very clear picture, actually. Historically, August has been a particularly weak month, especially if you look at the data going back to, say, 1988. And it's not just a tiny dip. It's this sluggishness pretty much across the board. If you break it down, like the Dow Jones, August is its single worst month, average return, negative 0.1%. The S&P 500, not much better. It's the second weakest month there, average return, negative 0.01%. And even the NASDAQ, the growth engine, it ranks as its second weakest too, with just a positive 0.3% on average. What's really interesting is that this isn't just a random blip. It often ties into thinner trading volumes. Lots of folks who are on summer holidays. And that can make the market less liquid, right? More susceptible to smaller shocks having a bigger impact.
Right, thinner volumes make sense. And this historical weakness, it gets even more interesting when we think about 2025 specifically.
That post-election year dynamic is definitely something to watch. You often have shifts in policy, maybe some economic uncertainty as a new administration gets going, or just lingering political stuff. So you combine that fluidity with August's, let's call it, natural tendency for weakness. And yeah, it can be a potent mix for underperformance. Historically, these post-election Augusts have seen average declines of like 1% or more. So it suggests that baseline weakness isn't just there, it often gets amplified. Any kind of underlying market anxiety seems to bubble up more acutely in that specific August cycle. And it's not just about slow performance either. Think back, 1998, the Russian currency crisis, that sent massive shockwaves. Remember long-term capital management? That was mostly an August thing. Or 1990, the Iraq-Kuwait invasion, big oil spike, market volatility, another August event. We've seen various hedge fund issues too, other big hits, often centering on August. These weren't small corrections. They were really stressful market moments.
Are there specific patterns within the month itself that you should be watching for?
Yes, there definitely are some intra-month patterns worth knowing about. You can help you navigate. So historically, the first, say, 9 trading days, they tend to be weak initially. It's like the market's still sluggish from summer or maybe some early profit taking as big players adjust before summer ends. But then after that initial phase, you often see a relatively stronger period, maybe around mid-August. And then, interestingly, sometimes a slight improvement towards the very end of the month. Maybe after some volatility is played out. Could be some repositioning as people look towards September, which, has its own set of patterns.
And talking about volatility, you mentioned options expiry week, usually the third Friday, right? What's driving that?
Right, the options expiry week is fascinating. It definitely tends to bring more volatility, more ups and downs, short term. You've got tons of options, contracts expiring, lots of hedging, position adjustments. It's kind of a clearing out moment. But the data also shows pretty consistently that the week after that volatile expiry week is often historically strong. It's almost like the market gets rid of some uncertainty, unwinds complex stuff during expiry, and then bounces back a bit once that pressure's off. So yeah, you might see a dip during expiry week, but don't be shocked if the following week shows some strength as new positions get established.
Okay, interesting. So beyond those monthly swings, you also flagged a very specific short-term thing, the down Friday, down Monday pattern. Can you unpack that one? Why is it so critical? What does it tell us about sentiment? Why watch it so closely?
Yeah, the down Friday, down Monday pattern. It's a really crucial short-term flag and pretty simple conceptually. It means just what it says. Market drops on Friday, then drops again on the following Monday. When that happens, it can often signal a bigger market turning point or maybe the start of a more serious correction. It suggests momentum's really shifting down and the selling is carrying over the weekend. That points to a real change in short-term feeling. And it's not just theory. We've seen it play out recently, a real warning sign. Like in 2020, it came before a sharp sell-off. In 2022, it hinted at adjustments coming with rate hikes. 2023, it flagged some volatile spots. It's a clear signal the bears might be getting a stronger grip. Experienced traders definitely watch it as a kind of canary in the coal mine for broader weakness.
Wow. Okay. So pulling all this together, How should you, listening right now, think about approaching the market in August, especially looking at 2025? Sounds like maybe not the month to be super aggressive. What's the common mistake people make, and what's a smarter approach?
Right, connecting all these dots. August really calls for more of a wait and see stance. That's how I'd put it. Maybe think about increasing cash holdings, or at least look hard at your current ones, and definitely actively manage your volatility exposure. I think the biggest mistake is just treating August like any other month, expecting the usual momentum, making aggressive short-term plays without acknowledging this historical backdrop. Instead, a more strategic, conservative response makes sense. It's not about panic selling, just being prudent, maybe some tactical hedging, using options to protect what you have, or maybe shifting slightly towards more defensive sectors, things that tend to hold up better when the market's stressed. It's also a good time just to check in with yourself, your risk tolerance, make sure your portfolio matches it. And yeah, while you might see some short-term bounces like after options expiry or mid-month, like we said, the overall defensive posture is really key. The historical data strongly suggests focusing on capital preservation, and careful risk management should be top of mind.
And it's not just history, right? We also need to keep an eye on what's happening now. External factors, politics, macroeconomic news. They can always mess with seasonal patterns. The sources mentioned the risk of a summer rally ending. How do these outside things play into August's typical weakness?
Oh, absolutely. Seasonality is strong, but it's never the only thing going on. Never. And August seems particularly sensitive to external shocks, partly because of those thinner volumes we discussed. Any unexpected political news, like policy shifts or global tensions flaring up, can easily make that typical weakness worse. Same with big economic data points, surprise inflation numbers, changes in interest rate views, major international events. They can cause outsized swings. Institutions know about August's history. They often get more cautious, quicker to adjust positions. So global issues or new policy stuff can lead to really rapid, sharp moves because there are fewer active buyers around to absorb selling. That idea of the summer rally running out of steam is very real, and these external events can be the exact trigger that turns a slow August into a really tough one. So yeah, keeping an eye on the news, not just the charts, is even more important in August.
Okay, so let's try and sum up this deep dive. August, especially 2025 with that post-election factor, looks like a time where history really urges caution. Strategic patience. Probably not the month for bold, aggressive moves, more about thoughtful defense and managing risk carefully.
You know that old market saying, August's a good month to go on vacation. Trading stocks will likely lead to frustration. It's kind of blunt, but it captures that historical tendency pretty well. But here's something else for you to chew on, beyond just this month. While market seasonality is powerful, this rhythm, when it doesn't happen, like if August turns out to be surprisingly strong against its historical trend, that's often a huge sign that other, maybe more powerful fundamental forces are at work. What could those forces be in 2025 if August defies history? A tech breakthrough, a big policy shift, geopolitics changing radically, and how would you spot them early?
That's an excellent point. Really leaves us with a lot to consider, not just for August, but for how history, psychology, and fundamentals all mix together in the markets. We hope this deep dive into August tendencies has given you a clearer picture and maybe some useful insights for your own market analysis, well beyond just this one month.